Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're looking at 3 stocks that have received all buy ratings from Wall Street analysts and have price targets that would imply some double-digit upside potential. We found these stocks using the Tip Ranks stock screener. Found underneath the screener menu, I put in a few different filters, of course a strong buy consensus from Wall Street, upside potential of over 20%, and I also wanted an outperform rating on the Tip Ranks Smart Score, and that narrowed down our list of stocks below. So today we're going to take a look at 3 of these companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. You can try the stock screener for yourself on the Tip Ranks website, or it is available on the mobile app as well, which you can download using the links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 unanimous strong buy stocks. First up, we're looking at Nexxen International. They trade under the ticker NEXN, currently priced at $9.85. The stock has climbed 28% in this past year. In the last 3 months, however, it's down 15%. They do currently score a 9 out of 10 on the Tip Ranks Smart Score. Nexxen is a global advertising technology platform specializing in data-driven video and CTV advertising. They provide an end-to-end platform that helps advertisers, agencies, publishers, and broadcasters optimize campaigns and maximize inventory yield. They focus on video-first advertising, enabling effective campaigns across digital, CTV, and linear channels, with advanced data capabilities at its core. They serve ad buyers and digital publishers globally, helping them achieve targeted outcomes through discovery, planning, activation, measurement, and optimization. Looking at Tip Ranks AI stock analysis, Nexxen does currently score an outperform. While there is some softness in the ad market as a few advertisers delayed campaigns to the second half of the year, Nexxen does have strong growth in areas such as CTV and improved EBITDA margins, and they're beginning to roll out new AI solutions to enhance advertiser value proposition. Their last earnings report just came out on August 13th. They did have an earnings and revenue beat, along with record contribution ex-TAC and programmatic revenue of $87.8 million. Adjusted EBITDA also exceeded expectations, coming in at $29.9 million, which was a 12% increase from the year before. We've heard from several analysts following that earnings report, including a 4.5-star analyst from Needham. They reiterated their buy rating on the stock, noting the strong quarterly results, which indicated a strong operational efficiency and profitability. They said the company's licensing revenue, particularly its investment in Vita for exclusive data on Hisense and Toshiba TVs, is seen as a strategic move to enhance their market position. There are 6 Wall Street analysts that all currently rate the Nexxen stock a buy, and the average price target of $15.50 implies an upside potential of 57% from current prices. Looking at those ratings down below, they range from an upside of nearly 17% all the way up to 82%. For our second stock, we're looking at AeroVironment. They trade under the ticker AVAV, currently priced at $247 per share. Their stock has climbed 21.5% in the past year and has gained 43% in the last 3 months. They also score a 9 out of 10 on the Tip Ranks Smart Score. AeroVironment is a US-based defense technology company, specializing in the design, development, production, and support of intelligent, multi-domain robotic systems. They serve defense, government, and commercial customers globally, with products deployed in over 50 countries. Their revenue streams come from product sales, long-term defense contracts, and services like training and maintenance. They also explore commercial applications such as agricultural monitoring and infrastructure inspection. On the Tip Ranks AI stock analysis, they do come in with a neutral score. There was a tremendous amount of investor confusion regarding their Ukraine exposure that led to a protracted sell-off, but they are considered the favorite to win an LRR production contract, potentially representing a significant program of record. Their last earnings report came out in June. The next one will be on September 8th, and they did have an earnings and revenue beat and achieved record fiscal year revenue of $821 million. That was up 14% year over year. And they also had record fourth quarter revenue, which saw a 40% increase from the prior year, and they ended with a strong backlog. Near the start of August, a 5-star analyst from Citizens JMP initiated coverage on the stock with a buy. The analyst said that AeroVironment is a leader in its core markets of uncrewed aircraft systems, loitering munition systems, uncrewed ground vehicles, cybersecurity solutions, and high-altitude pseudo satellites. They view the U.S. government's priorities, budget allocations, and new procurement mindset serve as tailwinds for the company. AeroVironment has 12 current analyst ratings, all giving the stock a buy. And the average price target of $295 implies an upside potential just shy of 20%. Looking at those recent ratings down below, they range from an upside of 7.5% all the way to 35.5%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last on our list, we're taking a look at Dave. They trade under the ticker DAVE, D-A-V-E, currently priced at $214 per share. They've seen massive growth this past year, up over 450%, but have leveled off lately, down 0.2% in the last 3 months. They also score a 9 out of 10 on the TipRank Smart Score. Dave is a fintech company offering a range of banking and personal financial management services. They operate as a neobank, providing a mobile-first financial services platform focused on helping consumers manage their finances and avoid traditional banking fees. Their key offerings include extra cash, Dave Banking, and a budget management tool. Their mission is to build products that level the financial playing field, targeting underserved consumers, particularly Gen Z and millennials, by offering affordable alternatives to traditional banking services like overdraft protection. And they do score an outperform on TipRank's AI stock analysis. While there was a slight increase in their 28-day delinquency rate compared to the prior year, their Q2 financial results were much better than expected. Those came out at the start of August with both an earnings and revenue beat. Revenue accelerated 64% year over year to $131.7 million, which marked the fastest growth rate in over 5 years. They had strong adjusted EBITDA performance and a significant increase in monthly transacting members. And while the stock has seen huge growth in this past year, Wall Street still thinks there's room for more. Following that earnings report, we did have a 5-star analyst from Canaccord increase their price target. They said that the company continues to be a fintech standout quarter after quarter in terms of growth, outperformance, and achieving better and better operating margins, and their Q2 was no exception. They view Dave as a quite attractive growth play across fintech, exploiting what is a very large need among underbanked consumers for banking and financial services products. And with 6 current analyst ratings, the Dave stock comes in as a unanimous strong buy. The average price target is $276, implying an upside potential of 28%. Looking at those price targets down below, they range from an upside of 4% all the way up to 48%. So that is a quick look at 3 stocks with unanimous strong buy ratings from Wall Street. Let me know your thoughts on these companies in the comments down below and which stock catches your eye the most. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.